Hello everybody, welcome back. Let's have a quick look at Bitcoin. And obviously we're going to look at the Dixie and the Nasdaq real quick though, because I don't want to sound like a broken record. Last week we said, well, okay, this is likely to reach a temporary peak here because of the nature of how the Dixie moved. So the dollar pumped up. Then I said, look, the chances are we're going to come back down to the 50 exponential around midweek, in the first part of the week. So we've done that now. So now what we're looking to do is to continue with the march up for the Dixie. So understanding that should correspond to understanding that there's still going to be some pressure on anything that's valued against a dollar. Doesn't mean that they're all going to go cascading down to hell, but the chances of them catching a bullish break at this stage is kind of unlikely. There will be moves up across the board for certain things, but generally the dollar needs to increase, and it will increase. And I'm not looking for any decent turnaround until March, really, which is when the first rate hike is predicted to take place. No specific date and no dates thereafter, but until that, the speculation is going to continue with this trend on the dollar, which is going to continue with the downtrend for anything that, not anything, but most things that are valued against it. So let's have a quick look at the Dixie. So again, the Dixie, did what we expected, ran up, and to be honest with you, a little higher than I thought it would, and that is largely to do with Google. It is Google, Alphabet. And a really good day upon its earnings, and obviously when you're looking at Google being one of the main contenders of the overall Nasdaq, it's going to lift the whole bag. So I mean, the Nasdaq's looking okay as far as its chart posture is concerned. It might still continue to rise, actually, given what we saw with Alphabet. And its general position on the chart isn't that bad. It's above the Bollinger Band center. Anyway, you don't want to know about the Nasdaq. We need to know about other things. So the Nasdaq's perking itself up a little bit more, but Bitcoin isn't. So Bitcoin came up to the center of this Bollinger Band, similar to how the Nasdaq did, but unfortunately, Google's got nothing to do with Bitcoin. So it came smashing back down again. So Bollinger Band, and now we're below all major moving averages once again on the daily. So we didn't even get to touch the old electric fence double super trend line here to get electrocuted and shocked all the way back down. So just like yesterday, and just like I've been saying to everybody, there's only really one major way to get excited about the downtrend here, which is to allow for bullish divergence to form on this RSI. And so far we've got such a ridiculous low here, much lower than the one that we saw over here in May after the 50% correction in a much faster period of time. This one's very, very low, and that's good in a way, because that will make it a lot easier for it to develop bullish divergence on the RSI, but unfortunately for anyone who's holding Bitcoin like myself, it's going to have to come down a little bit further before it goes back up again. So we're looking for a retest of these lows, and I think this is what we've been saying yesterday. I've been mentioning it on the live streams anyway. But generally, it's the way that this is going to go. This is a trend. The trend is continuing. The dollar is a trend that's continuing, and until March when the rate hike begins. And again, I know that everyone's going to say, but the interest rates will be changed in March. That'll make it worse. Technically, you're right in theory, but in practice, I pretty much doubt that there's going to be a major reaction to the actual hike take place. I think almost all of this price action for Bitcoin, traditional markets, and we were looking at some traditional markets on the live stream last night, they've been hit harder than Bitcoin, which goes into the idea that I've been trying to put across here, that this isn't a crypto bear market. This is a global sell-off, basically, protecting the gains that people have made, including you and me. We've all made some serious money last year, whether you're in stocks, commodities, or obviously crypto. Preserving some of that wealth, taking some profit, especially as it's coming to tax time, and then allowing for the dollar to increase, do its thing, the rate hikes to take place. There's one taking place today in the UK. The one in America will be some point in March. The crypto bear market is basically just no different to anything else. We looked at PayPal yesterday. That's been hit harder than Bitcoin. There's quite a lot of things that have been hit harder than Bitcoin. Bitcoin is just continuing to downtrend like everything else is. So that is my number one reason why this isn't a 2018 bear market. It's a reaction to the Fed, and the Fed are actually doing the hike in March. And just as we see things like buy the rumor, sell the news with mainnets and BNB burns, there's a rise in price leading up to that point where the mainnet releases like it's going to do something special, and then within a second after it's been released, you get a massive dump. So buy the rumor, sell the news. So in this instance, we flip that on its head, and it's a sell the rumor, buy the news. Pretty sure that when March comes along and the first rate hike takes place, then there might be there's certainly going to be a little bit of volatility on that day, maybe a few days after, but it should mark, to be honest with you, it should mark, if not the already printed low, but a low soon after, and then reality can kick back in again, and that's what I'm expecting to see, and that will go hand in hand with this chart here that we're looking at for Bitcoin developing bullish divergence between now and March. We've got I don't know, there's no specific date in March, so we'll give it about a 6-week period to develop bullish divergence. That sounds okay to me. And in the short term, we're going to fanny around here, almost a no trade zone really. I'm not particularly interested in taking any trades until March, not major trades anyway. I can pick up some more Bitcoin off a dollar cost average, as I sold over here a fair bit, and I've been buying here, and I will also buy here, and I will continue to buy lower. That's technically trading, I suppose, but what it's doing is it's stocking up my armory of Bitcoin that I can then use to do altcoin trades when the time is more appropriate. So for the moment, we'll sit back and watch and wait and see. It's a bit annoying that we have to wait till March for any fundamental change to the global situation, which is kind of what's going on here. And of course, there's other things simmering and brewing, like those things over in the Ukraine that would likely have an impact if something went on over there. I'd be surprised if something did go on over there, but I'm not into all that politics. It's just my feeling that I doubt anything serious is actually going to happen over there. But yeah, there are other things that threaten this chart. But if it was just this chart and the rate hike, I think we're going to have to wait till March for this to perk itself up. March also marks the end of this apex, really. So see where we go from there. Right, there's nothing more really to say about it, unfortunately. It's still the same as yesterday, so expect lower prices, sweeps of the lows. There will be people willing to and able to make trades on this. I think the best thing to do would be to try and make trades on short positions if and when we ever touch this trend line. That would probably offer the biggest and fastest trades. But me personally, unless something really, if I'm at my computer at the perfect time and I'm not sitting around waiting for something, I'll make some trades. But other than that, I'm more than happy just to wait till March and see how we respond to the first initial rate hike, not just for crypto, obviously, but for all stocks as well, because I am certainly looking to take advantage of some of these low prices for stocks to put into my pension. You got to think ahead. You know me, I like to think ahead. So I'm thinking pension. I'm thinking picking up some decent stocks for a long period of time, put it in my stocks and shares pension. Yep, boring. Anyway, I'll leave it with you there. Thanks for watching, guys. Take it easy, don't go crazy, and have a nice day. Take it easy, guys.